We're glad that you could join us on today's edition of Business Incorporated. Welcome to the program. I am Bolaji Akinwale. Coming up, the Trans-Pacific Partnership, one of the biggest multinational trade deals, has been signed in New Zealand. U.S. trade with Africa is set to offer cocktails of challenges and opportunities. Plus, Royal Dutch Shell PLC reports a decline in its fourth quarter profit after the rout in crude prices deepened, announces 10,000 job cuts. Okay, we'll begin with the Trans-Pacific Partnership. One of the biggest multinational trade deals ever has been signed by ministers from its 12 member nations in New Zealand. The ceremony in Auckland brings the huge trade pact, which has been 5 years in the making, another step towards becoming a reality. While the TPP continues to face opposition, the 12 nations account for some 40% of the world's economy. They now have 2 years to ratify or reject the pact. Now, it looks like a good day for the European markets. Let's bring in DWTV Channel TV correspondent live from the exchange over there in Frankfurt, Conrad Busen, as he talks to us about the developments in the markets. Good afternoon, Conrad.
Hi, Bolaji.
Welcome to the program. Now, dollar weakening pushes euro higher, followed by commodity prices. Is the rally still holding steady as we speak?
Has gained 3% this week alone, but traders I talk to see this rather as a dollar weakness instead of a euro strength. All the economic data, or most of the economic data we've been getting from the United States this week, makes investors believe that it's rather unlikely that the US Federal Reserve will continue to raise interest rates in March. And that also means that, you know, the yield advantage of the US currency is unlikely to get bigger. That's behind this dollar weakness and euro strength. Rally on the oil market, well, it looks like this two-day strong increase of the oil price already has come to a halt. At least the price of Brent crude, which is the sort from the North Sea, has slipped below $35 a barrel again. And also the recovery on the stock market today looks very, very weak. So quite obviously, investors have more concerns about the economy than they are hopeful that the strong downswing of the beginning of the year was exaggerated.
Now, the Bank of England's quarterly inflation report is on tap today as the ECB chief, Mario Draghi, says no retreat, no surrender on deflation. What are investors and traders' thoughts on this?
Well, look at the performance of the German stock index DAX today. I think it's quite reflecting what the reaction is. This doesn't really look like optimism among investors, and this despite the fact that the Bank of England let its key interest rate at 0.5%. The Bank of England also said that it continued to pump billions of British pounds into the markets by buying assets. Also, Mario Draghi's statements he made in Frankfurt today that the European Central Bank was ready to add more stimulus to the markets if necessary has not really inspired investors. Quite obviously, the concerns are large among the investment community that all this Reserve Bank money does not prevent the economy, the real economy, I mean, from hard times.
Now, oil prices weakening, oil firms post sharp profit slump, but automakers like Mercedes maker Daimler revving up more profits. Is oil prices driving auto sales, or who is driving who?
Well, quite obviously, the cheap price of oil has helped car makers like Daimler to sell much better some of their large gas guzzlers. That's, you know, what Americans call cars that consume a lot of fuel. This helped among other reasons, Daimler to come in with a very, very successful year 2015. The share price of Daimler is not on the upside today. It's even one of the big DAX losers. And since the beginning of this year, the shares of Daimler already have lost more than 20%. Quite obviously, investors here are concerned about sales perspective in China. And also, you know, the investors know that companies like Daimler will have to invest a lot of money in the future in new technologies like electric cars or self-driving cars. Also, the discussion around Volkswagen has fueled concerns about the diesel technology as a whole. All this gives investors reason to be rather reluctant to invest in shares of the car makers at the moment.
All right, thank you so much, Conrad. That'll be all.